All right, so let's get started. Good afternoon, everyone, or probably those in the West Coast, still good morning. This is the first session in Atmiya Fire. So, welcome to Atmiya Fire. We have in Atmiya, we have actually six services that we focus on. Asara, which actually takes care of the MS students that are coming to US and UK and Canada and Australia and other European countries. So primarily Asra is for MS students. Best is for businesses, businesses in engineering, sciences and technology. Buds is for the next gen kids within Atmiya, whether they are in India or UK, US or anywhere in the world. Buds is for kids. And the fire is for stock market, essentially, actually investments, not stock market alone. We also discuss real estate and cryptos and alternative investments, and of course, stocks and bonds and options. Of course, the last one is immigration. If anybody has any questions on immigration or needs any help, that is taken care in immigration. We also have another one, which is Kalyana Mastu, but for now, Asara, Best, Buds, Fire, Immigration, and Kalyana Mastu. So with that, let's get started. The disclaimer, standard disclaimer. We are not broker dealers, neither Atmiya or Fire. We are not broker dealers or financial advisors. The presentation can be construed strictly for education purposes only, and it's only investment advice. And we are not responsible for any of the losses resulting from this presentation. This is just to educate you. And the last one, trading or investing is very risky. So please do your due diligence before get started. So what is going to be 2023? So let me jump straight to the topic. If you look at S&P, this is the peak, and this is the bottom. That is so far. So from 4,800, it fell all the way till 3,300, around 3,500. So it's a drop of around 1,300 points. So 1,300 points within 1 year is actually brutal. That's like more than 20%. So if you look at it, S&P, we are not at 3,300. We are close to probably 3,900. So we actually, the market has actually jumped up from 3,500 to probably 3,900. So it's a respectable, healthy bounce of around 400 or 500 points. So it is not at the bottom. Now, I'm just checking how to. Yeah, sorry. Actually, I'm struggling with the annotation and the present the slides. So the second one is the IWM. So IWM, if you guys are not aware, that's the Russell 2000, which is primarily the small caps. So the small cap stocks are typically the canary in the coal mines, which means they typically jump up before the bull market begins, and they typically bottom before they typically start dropping before the bear market begins. So right now, it is on par with the S&P. It is not at the bottom. It fell all the way till 160 from around 240. So that's to be honest, that's almost 33% drop from 240 to 160. Now we are at around 180. Not bad. We are not at the bottom, but we're not in the middle range either. So S&P and Russell 2000, the small caps, both are in sync. they are off their bottom, off their basis. They're not at the bottom. They're probably like around maybe 20% or 30% off the basis. Now, let's come to the NASDAQ. So NASDAQ is probably where most of the IT folks invest in. Like, most of us, we are in IT industry. So we understand Amazon, we understand Microsoft, we understand Adobe, and we understand Asen and Digital Turbine or whatever. We understand the technology better than most of the other folks out there. So we tend to invest in tech stocks. So for us, more than S&P, more than the small cap, you also have to start paying attention to the NASDAQ. So NASDAQ is the 100 stocks. If you look at NASDAQ, this is where the interesting part is. NASDAQ is actually NASDAQ is actually at the bottom. From 1600, it fell to 10,000. So again, very large drop compared to S&P and the small cap. One of the reasons, one of the interesting aspects of S&P 500 versus NASDAQ is NASDAQ is tech heavy. NASDAQ has majority of the tickers within NASDAQ are tech stocks, whereas S&P 500 also has stocks from energy sector. So energy sector actually did pretty well in 2022. So maybe that's the reason S&P did better than NASDAQ. Whereas the small cap is Russell 2000. It has a combination of all sectors, but small caps. So NASDAQ is interesting because it is at the bottom. So which means the market is not going to go up unless the NASDAQ participates. So at any time, if you look at the indices, S&P 500, NASDAQ, and the Russell 2000, they have to be in sync. Right now, S&P and the Russell 2000 are in sync. NASDAQ, not yet. Now, that is at the surface level. Now, if you go to the next level, if you look at the NASDAQ, one interesting aspect of NASDAQ is NASDAQ is typically it's a market cap weighted. What it means is if there is a stock of let's say 200 billions and there is a stock of 20 billions, this is NASDAQ goes by market cap, which means when the $200 billion goes up, even if the 20 billion stocks, 5 of them actually go down, it doesn't matter. The tech, the $200 billion is going to actually bulldoze and is going to lift the market. So what are those $200 billion? I know the tech heavy or the market cap heavy stocks. The usual suspects. Apple, Amazon, Microsoft, and the Teslas and the typical tamannas. So if you look at the Nasdaq 100, and if you say Nasdaq equal weight means you do not give $200 billion stock more weightage than, let's say, 20 billion. You allocate 1 point to all the tickers within the 100. That means there's only one vote for a $200 billion company and a $20 billion company, or even a $2 billion company. That means the equal weight is going to explain the market participation, whereas the Nasdaq, the typical Nasdaq, actually explains if a heavy weight goes up, the whole market actually is going to go up. So it's not going to really reveal the participation, but the equal weight is going to explain the participation. So the bottom one is actually um, it is already off the bottom. That means this is actually in line with S&P 500 and Russell 2000. So this is actually a good sign. So what the this stock, I mean this chart and this chart are showing is the heavyweights, which is like Amazons and Microsofts and Teslas. These are the culprits. These are the ones which are not really participating in the market rally compared to rest of the market. So what will happen if let's say Tesla jumps up? I think the market is going to rally heavily. So the market is not going to rally as long as, and rather the market is not going to rally until the heavyweights participate. So this is something that we have to keep watching. Microsoft and Amazons and Apples and the Nvidias and all the. If you look at the market cap, I think these are the ones that you need to pay attention to. Now, let's go to the next. I have around 15-20 slides. Then we'll actually we'll go to the charts and we'll actually take up Q&A. So the NASDAQ and the actually this one, sorry, I forgot to change the title, but rather we're talking about the 10-year yield versus the market, the stock market. So the 2023 started off very uneventful because in the last 10 days, market was actually in a range. So which means it was neither moving up nor moving down. It was actually waiting for something. And then last Friday, it actually revealed the intent for the first time in last 10 days or last 2 weeks. It actually jumped up. And typically, if you look at the 10-year yield and the stock market, they are inversely related. That means when the market goes up, the 10-year yield, the treasury yield, is supposed to go down. And if it doesn't go down, and if they do not go inversely, it's actually a trouble. So, for example, let me see if I'm not really sure if I can hide this. Yeah. So if you look at June, the market was actually range bound, and then the yields were actually falling. So which is fine. And the market, when the yields started going up, the market actually fell. So which is fine. The same thing here in July also. When the yield was actually falling, the market was actually going up. So this is all good. This is actually a healthy market. See, I'm not talking about whether the market is bullish or bearish. It is actually the traditional market. See, at any time, market is bullish or bearish, it has to follow certain principles. Let's say the bearish market, the puts and calls, are they spiking up? Are they, the put call ratio is spiking up, and the breadth, is it falling? And the yield is falling. So there are certain principles that market operates on. So as long as the principles are actually the guiding principles are actually adhered to, we are good. But if they start deviating from each other, then that is where we say something is not right. Market is not acting well. So for the first time, actually in the last 10 days, or since December, this is not really like a healthy market, or it is not really doing well. But Friday, market jumped up and the yields actually fell down. So this is actually a good sign for the near term. So when I say near term, I'm talking about next 2 weeks or 3 weeks. So I'm trying to go to the next slide. Okay. So if you look at the put call ratio, The put call ratio is also, again, it's um, the put call ratio actually spiked up, in December. So that means either people are actually afraid of the market. That means, people are actually expecting the market to crash, or people are actually hedging. One reason I see the put call ratio spiking up towards the end of 2023 is maybe, the hedge funds, they were actually positioning themselves. They're actually, um, they wanted to protect their gains or losses for the year. So that's why, I'm not worried about the put call ratio, but the the put call ratio actually reveals another interesting phenomenon. That is, if you look at this, the market actually, it was actually a bottom in April of 2018, and it again, it spiked again here, at the beginning of 2019. Market also bottomed. So I'm not saying it's the bottom, but I'm saying temporary bottom. And the same thing, anytime it speaks, it peaks, the put call ratio, market actually quietly moved up. The same thing here in 2020, March. I think, that was the COVID, the wave. So market actually bottomed. So anytime you see put call ratio peaking, that typically denotes a temporary bottom. So um, we we see the put call ratio actually spiking, and it's close to 1.25, which is, again, is this as bad as the COVID March? Absolutely no. But still, this actually, the 2019 and the 2020 were the only two times the put call ratio was so high. So we can safely assume that, this is a temporary bottom. The market has the potential to go up to maybe 4200. So again, in stock market, you should never hold strong opinions. If In fact, many people uh, comment on, Jim Cramer, right? They say, oh, Jim Cramer said this, and that's why the market actually reversed and so on. But um, I actually sympathize with Jim Cramer, because calling a market bottom or calling a market top is actually a very dangerous and very risky proposition. So nobody knows what's going to happen in the market. Nobody, including you, including me. So uh, always you have to look at the market uh, in terms of probabilities. What is the probability that the market is going to go up? You say, yeah, 50%. You say 60%. Maybe you say 70%. You should always look at the predictions in terms of, the predictions. Yeah, I mean, that's actually a different discussion altogether. But let's move on to the next one. Um, So the put call ratio temporarily shows. So if you look at, Ramesh Chintagaru, he actually he shared the market outlook for 2023. The credit, Anthony Chung. So from Goldman Sachs, JP Morgan, Morgan Stanley, Bank of America, BlackRock. So if you are interested, you can actually log into Discord. You can look at all these the market outlooks for 2023. I did not look into all of them, but I spoke to a few folks from Wells Fargo, a few folks from, GS and Morgan Stanley. What they're saying is pretty much everybody is predicting the same thing. They're saying it's going to be brutal. So, so let's see. It's always good to hear what other people, other banks are actually, the big banks are actually saying. But what is my personal opinion? What is, how do I evaluate all these opinions? You can go by what the bank says and blindly, but my suggestion, nobody knows nothing. I think that's a famous saying in Wall Street. Nobody knows nothing. So let's go to uh, the bullish case. Like I'm going to talk about the bullish case, and then the bearish case, and probably the conclusion, or my interpretation of what I think is going to happen in 2023. So if you look at 1930s, yeah, this is the World War One and the 1940s, uh, the Great Depression and so on. So barring these 1930s and 1940s, uh, in the last probably literally 80 years or 90 years, back to back down markets are rare. It happened actually, I believe here in 1970s and 2000. So the dot-com burst. So even the 20 also, I mean the 2008 also, again there was no back-to-back. So if you look at this, a back-to-back down markets are very, very rare. Now, for the first time, we had a down market in 2022. This is only till 2020, so that's why we don't have all the data. So 2022 saw a down market. So will if 2023 is also another down market, whether it is here or a bigger or equal, doesn't matter. If 2023 happens to be a down market, this will be the third time that happened after 2000 and the 1970s. Uh, so you have to look at the historical. I think the quant science is actually pretty good. What is the context? What is the historical precedence that led to this particular market? So that means, what if 2023 happens to be a down market, this is a rare phenomenon, once happening in the last, happening for the third time in the last 8 years is a rare phenomenon. So the other bullish case is typically, if you look at any presidential year, the year one is moderate, year two is actually the weakest. So 2022 was the second year of the Biden's presidential year. The third year is typically the strongest, especially from November till April. That means what started in November 2022 will last until April. Like typically this is sell in May kind of cycle. This is the strongest historically. This is the strongest for the past 100 years, actually 120 years, if you go by the Dow Jones. So the 2023, it could be, historically it is supposed to be a bull market historically, and historically this is supposed to be the strong market. And again, if you go back to back down markets are rare. So 2023 points to be probably better than 2022, or if not bullish. So there are two cases of being bullish. What time is it? It's 12:28. So I have to conclude this in the next 10 minutes. Okay. So there are two cases for the market being bullish. Okay. Now let's take the cases of the bear market. Now, this is the next two slides are going to be very interesting. Whenever I think somebody, I hear some background noise. If somebody, if you don't mind, Uday Neelam Garu, I'm going to mute you. Okay, thank you. So if you look at the last rate cut and last rate hike to the first rate cut, typically market always goes in expansion and the tightening cycles. So the quantitative easing and quantitative tightening. So whatever you call it, typically it lasts for around 200 days. this is what you're looking at, the 200 days. Again, there is this factor. I mean, this slide, you have to take it with a grain of salt. The reason is, every um, quantitative tightening and easing, they follow different parameters and a different mindset and different markets. So you cannot really equate them, but just for a perspective. So um, once um, for 23, you're expecting maybe a couple of more rate hikes. You know, uh, point 5 or 0.25. So we are expecting, the bond market is actually expecting minimum 2 rate hikes in 23. So after that, there could be a pause, but do not expect a rate cut at least for another 200 days. So which means another 8 months or 9 months, there won't be a rate cut. And unless there is a rate cut, it is not really the expansion cycle yet. So uh, the lull period is actually, I would rather call it as the stagflation or whatever you call it. That is the no man's land. The market is it's not trending. It is actually it's a range bound. So let's go to the next one. So that means if there were to be a rate pause, between the rate pause and the rate cut, there's going to be at least 200 days pause minimum. So that's the one point. And this slide is actually the most probably scary chart of my entire representation. If you look at this, anytime the market Fed actually pivoted, um, anytime Fed actually pivoted, market actually did not react kindly. Market actually reacted negatively. So, for example, if you look at this, let's take the last 20 years, the rate cut, market didn't stop. Market actually fell. And again, 20, I believe around 2014, 2015, market, the Fed rate actually got cut, and it didn't stop. Market actually fell 35%. So just because the rate is going to go up, maybe little, like, not at the same pace as it did in the last 1 year. Let's say the rate of increment slows down, and then there is a Fed pivot. The market is cut by 0.25. Even then, the market is not going to stop. Market will actually crash, going by these historical events. So, okay, we said we gave a bullish case and we gave a bearish case. Now, what is the conclusion? Okay, what is the meaning of all this 30 minutes? Let's address that. So, bullish or bearish? There is no sugarcoating that market is actually in bad shape. The trend is down. The sentiment is actually it stinks for the year 2023. This is more and more looking like the dot-com bubble and the financial crisis than small V-shaped recoveries that we have seen. So this bear market, this is going to be a prolonged bear market. It is not going to be like a short and sweet V recovery. Unfortunately, the average age of the Goldman Sachs or the Morgan Stanley or the investment bankers, their age is around less than 35. They pick the college graduates, they train them, and um, the average experience of these investment bankers is around 10 years or 12 years. That means whatever happened in 2008, all these kids, they haven't seen. They never experienced a bear market. The same thing goes for probably some of you. in the audience also. Maybe some of you have actually seen 2008, so you understand the market. Maybe some of you have seen actually 2000, but um, so those guys will understand what is actually a bear market. But for rest of the folks, this is actually a never seen phenomenon. So will the market actually bottom, and can we expect a bounce in 2023? I don't think so, because the rates are still high, inflation is high, unemployment is still very low. Fed has no reason to pivot. I mean, they don't see any reason to pivot at this point. So, what is the best case scenario? The best case scenario is probably the lesser incrementals. Instead of increasing the rates by 0.5 and 0.75, they're going to increase by 0.25 or even less than that. So we have to expect at least 2 more rate hikes, and after that there could be a pause. And the last point is actually very interesting. Market typically bottoms during a recession, not before. So technically, are we in a recession? Not yet. So technically, a recession has not been declared yet. So I think Biden actually changed the definition of a recession, which is actually very slimy. But otherwise, technically, we are supposed to be already in a recession, but he didn't. Right now we are not in a recession, technical recession. When will we be in a recession? And people actually say, "Oh, are we going to be in a recession? Or will the market be, bad?" Um, I would say, market is always, forward looking. Market is forward looking by 8 months to 9 months, or even 12 months. So, which means market actually forecasted recession long time back, not now. So there will be a recession. So whether when that recession be declared, whether the first quarter of 23 or second quarter of 23, is a matter of technicality. So don't even worry about the recession. We are already in a recession because market said so. Forget about all the other parameters. So is this the bottom? No, because there is no recession declared yet. And recession, market bottoms during a recession. That means we're expecting a bull market, maybe. So the market is going to bottom. So which means we're expecting another leg down in the summer. So whether it is going to come in May or June or July, there will be another leg down. Whether we're going to retain the previous low or not will depend on the scenario at that time. Let's say China comes up with another way of a new variant of COVID, or something else completely, or it could come from a different phenomenon. You never know. For example, the Ukraine war, maybe US will actually enter the war, and probably there could be a World War III, or a mini World War III. So whatever happens, yeah, the danger is going to come from another angle. It is not going to come from China alone. So whatever happens, the forecast is there will be another leg down in 2023, probably around summer. So what is that we can do? I mean, what are we expecting in Q1 and Q2? Right now, in the immediate future, we are expecting some leg up. The market is actually it is supporting a bounce. And remember, the biggest bull markets are the biggest bounces happen during a bear market. So there is another thing that we have to keep watching is the January barometer. So if January is down, typically the entire year will be down, and January is up, typically it is up. So we also can check how the market, how January is going to end up, is going to shape up. We've been there only for 1 week, so we still have to check for the next 3 weeks. See again, if some of you are expecting a crystal clear answer saying that 2023 is going to be brutal, is going to go down by 23%, don't believe such predictions because nobody knows nothing in the stock market. And the what they're saying is the chances of the probabilities of 2023 gonna be brutal is probably 60%, maybe 70%. So always take any prediction with a grain of salt in terms of probabilities. So right now, uh, how are you gonna determine the 2023? Yeah, let's look at how the January is gonna shape up, and keep in mind that probably around summer there is going to be a second leg down, and keep watching. And we have to. This is the historical perspective, whatever we said, and 2022 was brutal for a majority of the investors, right? But 2022 was also fantastic for the energy traders because energy actually jumped up by 10% and then 12%. And similarly, the bears minted money in 2022 because market actually fell 1,300 points. S&P fell by 1,300 points. So what is good market and what is bad market depends on your perspective. It depends on your portfolio. It depends on your positioning. If you position yourself for a bear market in 2022, 22 was fantastic for those folks. And if you position yourself to be a long trader, it was horrible. It was miserable. And if you position yourself into growth stocks like Upstart and this kind of stocks, probably it was a very, very, very bad market for you because you lost probably 90% of your portfolio. So it is not the market that actually gave the drawdown. It is actually your positioning that gave those returns, because the people that lost 90% in 2022, remember, you actually gained 400 times or 400% because the same stocks jumped up from $330 to 200 or 250. So that means you made very good money. Your portfolio increased by 4 times in 2021. And if you stuck to the same mindset, you lost 90%. So how is gonna 23 gonna be? Some of the stocks are not gonna recover. It will take maybe 10 years for those stocks to recover. So I would say probably position yourself, get into wide mode stocks. Discord has lots of stocks. I believe we have that. Let me check actually. Wide mode, yeah. So I think I downloaded this from our Discord. Biogen. This has a wide mode, and Viva, and ServiceNow, Adobe, ASML, Intuit. So we actually started getting into Intuits and ASMLs and Adobes because these stocks will actually grow more than the market does. So position yourself into the best stocks, and probably the growth has to be little bit, like maybe 10%, maybe 20%, because the growth stocks are going to jump up by 90%, or they're going to double, triple in the next couple of years. So everything boils down to your risk management. So let me go back and GS, Goldman Sachs. This is one stock that we actually are trying to get into. You see this? This is actually the crossover. Remember, anytime there is a crossover, the market actually jumps up. It goes up, and it's actually called kiss and bounce. I think we covered these topics so many times in Atmiya Fire sessions, including the workshops. So anytime there is a crossover, yeah, there will be a bounce. So you see that crossover. So there will be a bounce. Whether it's going to bounce and probably retouch and go back, yeah, this Goldman Sachs looks pretty good right now. Let's look at the next one. Starbucks. So Starbucks is also pretty good. If you look at um, Starbucks, yeah, this is actually, if you look at this is almost like, all-time high, and it is just the beginning. And this kind of breakout is superb, which means this will actually go all the way till here, and then it's going to come back and retouch 105, the previous highs. So this is also good, and how will you, when we know this is going to come down, whenever this actually pauses, this is going to go down, and whenever it plateaus, whenever it actually flattens, that's when it's going to come back. So this is how it's going to be, look at any of this. So these are some of the indicators. I think, this is what we actually teach in Atmiya Fire. Um, so we don't really predict the movement of the stocks. Rather, we teach you the science of the prediction. Okay, the art of the prediction. So, sorry, I think I have one more. Um, yeah, sorry, actually, I stopped the screen share. Can you see my screen? Yeah, I think, yeah, screen sharing. Perfect. So Starbucks is pretty good. And what's the next one? Walmart is also doing pretty good. You look at Walmart, um, this is a crossover. And remember, it is just the beginning. And anytime it is at the bottom and this is crossing over, you can actually expect some good bounce. And this is also, Walmart is also not as bad as here. See, this is the bottom, and this is actually the beginning. So this is called actually the divergence. So this is the positive divergence. So Walmart is actually pretty good. So if you want to position yourselves, yeah, these are some of the stocks, and we're going to present probably more. We're going to share more into in Walmart in Discord. So if you're not there in Discord yet, please join Discord, because it has some of the some of the good traders out there. They're actually sharing lots of information. So um, I think if you're not there in Atmiya membership, this is the link for Zoom, this is the link for Discord and WhatsApp. The simple technique is at any time, tinyurl.com/Atmiya. If it is Zoom, Zoom, Discord, Discord, Atmiya, WhatsApp, WhatsApp. So if you want any of your friends, or again, only from the community. This is strictly for community. So if you have any of your friends or relatives or family members interested in joining Atmiya, yeah, please share the links. So with that, let me take a Q&A. How much time do we have? It's already 12:45. So we have 15-20 minutes. So that's good. So let me take Q&A, please. Actually, you know what? Actually, let me share. Let me ask the questions. Okay. Do you expect recession here in US? I think, as I think I already answered. We are already in recession. See, there's always the main street and the stock market, Wall Street. They actually uh, forecast and resemble. Wall Street is actually 9 months forward looking. 9 months to even 12 months. So it's always forward looking. Even before something happens, the Wall Street can actually predict that, and it can actually, canary in the coal mine. It can actually showcase. So market fell 20%, 25%. Yeah, that is recession. And or China invades Tesla. Sorry, Taiwan. Absolutely. Again, the China invading Taiwan. That's actually, it's all about this particular stock. Taiwan Semiconductors Manufacturing. And if you are worried about China invading Taiwan, it's mostly majority, it is related to this particular stock. That means, the Taiwan, the TSM, this is probably one of the largest semiconductor companies in the world. And it controls the supply chain. It controls um, the assembly line of semiconductors. So uh, China has all the manufacturing industry. China has, they are into electronics manufacturing also. But the semiconductor industry has eluded them all this while for the past, 10, 20, 25 years. And Taiwan has that, the chip, which is the TSM, literally. So if China invades Taiwan, this is primarily for this particular company, nothing else. More than the territorial sovereignty and so on. But it's all money. It's all about the controlling, TSM. So there's also another interesting rumor or probably doomsday conspiracy theories. That's the word that I was looking for. Conspiracy theories is TSM is actually heavily controlled by USA. So if China invades Taiwan, there is also a rumor that US government will actually sabotage TSM. They're going to destroy, they're going to bomb TSM, and they're going to destroy TSM, the plant, so that even if China gets hold of TSM, they will not get the technology. Anyways, that's a conspiracy theory, but just for tidbits. The chat, let me look at the chat. Comment on Tamanna list. So the Tamanna list, I think, the Tamanna is, Tesla, Amazon, Microsoft, Apple, Netflix, Nvidia, and I believe the Alphabet, the Google. So that's the Tamanna list. So they have to jump, Kesugaru. The market has to go up. The heavyweights have to jump up. But remember, the mega caps, the list always, keeps rotating. It is never the same. So Amazon has had a good run of 20 years. Since 2000, since 2022, Amazon had phenomenal growth. Same thing with every stock out there. But we will have new market leaders. This is actually the market um, which is going to reveal the next level of leaders. I'm not going to say they're going to retire. Tamanna is going to retire and so on. For example, Netflix. Netflix made a blunder of not getting into the games when they have when they captured majority of the streaming market. They didn't take the right step. They didn't they were not aggressive. They should have gotten into the Unity, they should have gotten into the online gaming. They didn't. So, the other companies actually got into the Active Blizzard and the Activision and all this. Uh, they got into the gaming, and they're actually positioning themselves. So Netflix actually lost out. So it depends on how soon they're going to turn around and they're going to come back. In the meanwhile, Netflix will be replaced by another company, and you never know. And the Nvidia is going to be replaced by another company. So the market leaders will change. So Google may not be there. Chatbot, the Chat GPT, it may take over. Who knows? So let's not really talk about the predictions, but acknowledge the fact that um, what got you here will not take off from here. So Tamanna will be replaced by something else. So what will be revealed in the next 2 years or 3 years. Can we start adding ETF like Soxel and the Yin and the TQQ? So you can actually get Soxel and the TQQ and the Yin, Ramesh Garu, but you always understand these are double-edged swords. If market falls by 3%, these are going to fall by like 10%. So there's also something called the attrition. So which is these when they get adjusted, see 30% jump, 30% spike is not same as 30% drop. You have to understand that. because a $10 loses 30%, it becomes $7. But $7 increases by 30% is not same as 10. So the same math will apply to the SOXL and YIN and TQQs. So you have to be really careful. But yeah, you can be aggressive. The SOXLs and the TQQs are trading vehicles. These are not investment vehicles. So if you know what you're doing, yeah, these are great vehicles. Um, so we read the various source articles from Wall Street journals, Barron's, CNBC for news to get financial information. What is it to expand our source? Example, websites, TV shows that helps to keep us informed and plan accordingly. Good question, Jay. My suggestion is you should be informed, but you should not, and then you should actually read um, disparate sources. What I mean is, for example, seeking alpha. Seeking alpha is always, bearish. And look at um, probably CNBC or any of these. So you have to look at a bullish scenario and bearish scenario. TV shows, I would not really watch TV shows for any of my information. Um, you can actually subscribe to newsletters. You can actually read some of the um, uh, websites. But Seeking Alpha is pretty good, and the Barron's is also good. Again, Market Watch is good, but limit them and do not get the same information. And do not watch, do not read the same information from multiple sources. Then you'll start having biases. So your biggest job is not to have bias, at least minimize the biases. So and then Discord is also pretty good because Discord actually compiles all that information. So what we Atmiya has, Atmiya Fire has phenomenal information. We have at least 100-150 members that are selflessly sharing with close to 4,000 members out there. When placing orders, usually what indicators we should watch and what should be the time frame of EMA. So EMA typically 7-11. So again, depends on your what you are trying to do. So for example, if you're investing, you have to look at weekly charts. And if you're trading, you have to look at probably hourly charts. And hourly chart will determine the EMA. So 7 and 21. Those are the parameters for EMA. And I look at there is an interesting concept called multi-time frame analysis. Multi-time frame analysis means you start with a monthly chart and actually and then drill down to weekly and then daily chart and then weekly chart, hourly chart. So unless you are day trading, which I advise you not to, do not day trade, but you can do trading for short term, you can do trading for midterm, and you can do investments for long term. So if those are the scenarios, weeklies, monthlies, weeklies, daily, and hourly, these are the four time frames that I look at. And pretty much I stick to the 50, the 200 moving averages. And I also look at the 20. So 20, 50, 200. So those are the time frames. And the MACD and so on, I try to keep them standard. I also have something called LBR 310 indicator, which is nothing but MACD of 310 instead of 12 and 26 is 310. Again, we have covered all these topics multiple times over the past 7 years. So if you are new or if you just joined or if you do not know, no problem. Ask the question in Discord. So that's about the question from Zoom and Jay. MACD crossover that you explained is on daily chart, right? Yeah, Vijay Puleti. Yes, this is on daily ending. But you also check one more thing. You also check the weekly. Let's see how TSM actually looks at the weekly. So weekly is already bullish. You see that? So weekly is already bullish, and weekly actually the bull scenario actually started. So bullish TSM is already bullish, and let's look at the daily. Um, boy, this is okay. So TSM.
Venkat, screen refresh card.
Okay, so if you look at monthly it hasn't bottomed yet, so it's probably too early. And weekly, it has bottomed. It's already jumping, which is good. And let's look at
Take Costco as an example, sir. I see it has rather crossover on daily, but not on weekly and monthly.
yeah, no, weekly is already crossed over. TSM.
Okay.
Yeah, you see that it already crossed over way back in October, November 7th.
Yeah.
Yeah. So if a daily chart is supported by weekly chart, go ahead. I think you should actually take. It's all about probabilities, right? So you should actually give more weightage to this kind of chart. The same thing with probably Walmart. Let's look at Walmart. So if you look at weekly,
కనిపించట్లేదండి.
oh, I'm not charging. Oh,
Always says Q&A.
Q&A లో ఉంది. Q&A లో ఉంది.
oh. Sorry. So yeah, you should have told me. I've been um, sharing my charts for the past 10 minutes. Sorry. Yeah. Can you see the chart now?
We see now.
Okay. Yeah. So if you look at TSM, the weekly here, and if you look at daily, it's already bullish. So it's actually, so this is actually a beautiful chart, TSM. And if you look at Walmart, it's a beautiful chart because Walmart is already bullish since July. And on daily, now it's doing another crossover. So superb. You should get into Walmart and look at GS. GS, look at weekly. So weekly, this is called actually, this is a crossover, and this is actually a hook. This is called a hook. And now we're actually literally at kiss and bounce. So kiss and bounce is good. You see this. There's no better chart than this for technical analysts, GSM, for Goldman Sachs. So the chance of this actually jumping from here are pretty high. The reason is
Daily.
the daily is actually supporting it. That's why daily is actually crossing over and it's actually just beginning. So that's why the weekly is going to be a kiss and bounce rather than a kiss and drop.
Can you look into Costco one day? Because Costco, there is a bounce on daily, but not on weekly and monthly. So how do we interpret that thing?
Yeah, so let's look at the weekly. Weekly, not yet bottom. And that means the way I read this is the daily has to be, there's going to be a bounce, and whether it's going to cross the 490, whether it's going to cross the 507 will determine whether it's going to be a long term or not. So Walmart midterm bullish, long term bullish, short term bullish. Costco short term bullish, midterm neutral. So the daily has to uplift and it has to push the weekly chart.
Yeah, the weekly chart has to be changed.
Yeah. So unless the weekly chart bounces or curls up and probably crosses over, I would not, for me, this is 60% bullish Costco, whereas Walmart is let's say 80% bullish. So the probability, both are bullish on daily, but the weekly will actually reveal the deeper meanings. Okay, let me, recording available in a while. Nice presentation. Okay, joined recently, planning to cover early session again, new feature. So we have lots of experts in Discord. They can actually explain some of the concepts that we're talking about. But see, we are not about this particular presentation, guys, for anybody that joined now. We have been doing this for the past 7 years. Since 2015, we have been conducting these sessions. We actually went over each and everything. what is MACD, what is kiss and bounce, what is daily chart, what is a weekly chart. So we have been doing this yajnam for almost 7 years or 7 years. So we will continue to do this. So if you just joined, no problem. It's going to take you some time, but you can actually ask for the sessions, and we will actually rerun them, and we can actually teach you one more time. We have absolutely no issues. As long as there are learners, we will teach. We'll continue to teach. Teaching is our passion. Okay. Q&A. You're not sorry. Okay. Placing orders and Tamanna list. Venkat Garu, what are your plans for 23 from investment perspective? Okay, Naresh Saladi. So my plans for 2023 investment, I want to get into good stocks, and I want to position myself for long term, but I want to do more of stock of options than stocks in 2023, because 23 is going to be volatile. We see a jump in the first quarter, second quarter, and then we're going to see a recession, or Q1 is going to be good and QT is going to be brutal. You never know. So I'm positioning myself. So I rather be trading the long-term investments. Is Tesla still go down? To be honest, Tesla, I think, it has taken too much of beating. It should not have been so low. I think, it got punished more than it deserved, for whatever reason. So I'm not a Tesla boy. I'm not a Musk fan. Of course, I like Musk and Tesla both, but the stock itself, it got punished way more than it is supposed to be. So temporarily, yes, I'm bullish on Tesla, just because, contrarian view. The next question, Q&A, Tesla. Yeah, I think Atmiya, fire session. Okay. Reminder, we have options overview at 2:30. So we will be, I think, we have to wrap this up. Any other questions, if you have, please join. And we have one more session on options. Actually, we have two more sessions today. One session by Jay Chamata on options overview at 2:30 Central Time, Eastern Time, which is 1:30, which is another 20 minutes. And then we have one more session for the kids on Sanatana Dharma. Krishna Hemadri Garu is going to talk about Sanatana Dharma. Why it is important to teach our Hindu Sanatana Dharma to kids later this evening. Yeah, I think, with that, I'll try to wrap up. Tesla, Discord. Okay, so you already saw this Discord link. So with that, if I have to stop because we have another session in another 20 minutes. So thank you so much for joining, and I wish you good trading, great learning in 2023, both in Discord and WhatsApp, and probably in general. And if you already know things, please share. If you do not know, please learn. Thank you, and have a rest of great weekend. Thanks, guys.
Thank you, Venkat Garu. Thanks, everyone. See you in half an hour or 20 minutes.